With ProShares launching a Bitcoin futures ETF on Tuesday, that could open the door for 3 other Bitcoin futures ETFs that are up for SEC approval deadlines this month. If the SEC does nothing, which is widely speculated to be their move, it would give the funds tacit approval to begin trading. And joining us now to discuss is Lisa Braganca, attorney and former branch chief of the SEC. Hello there, Lisa. Good morning. So your initial reaction to this news of a ProShares Bitcoin ETF that may be launching on Tuesday? Oh,
I'm so sorry. Can you hear me?
Yes, we can hear you now.
Great. Okay. They thought I was muted. Okay.
So, just your reaction to the ProShares Bitcoin futures ETF that is launching on Tuesday.
So this is pretty much the minimum step that the SEC could take. I mean, it shows confidence that the SEC has in these markets, but it allows the SEC to sort of piggyback on the CFTC. So the SEC, still has its concerns about whether the Bitcoin market price is susceptible to manipulation. But when we have the CFTC through the CME overseeing the monitoring of price and the monitoring of the trading of futures, it kind of gives the SEC some comfort. I think the SEC probably also took some comfort in, who's involved in this ProShares ETF. A lot of, big establishment players and who, regularly operate in the securities field. And so, they know what's required. So that's going to, make the SEC feel a little bit better about this. But I'm expecting, they will allow additional futures ETFs to get registered, get out there, because they don't want just one. They want customers to have lots of choices.
Welcome back, Lisa. So could you just break this down for us for people who don't follow the crypto ETF world? So the logic here is that a futures ETF is more acceptable to regulators because somehow it's less susceptible to the volatility or market manipulation of Bitcoin prices, which I think is a little bit, can you just explain why a Bitcoin futures ETF, regulators are more comfortable with that than a spot ETF? Because I think it's not abundantly clear to everybody.
That's a good question. Because we have had this index that the CME has been taking care of since I think late 2016, and we have 2 indexes of the price of Bitcoin that they have been managing: the Bitcoin reference rate, the Bitcoin real-time index, and the concern was there's too much volatility and that the price might be manipulated. But those indexes have turned out to be pretty reliable. Lots of folks are using them. And, the roof has not caved in. And so the SEC got to be conservative on this and kind of, push the CFTC out there in front. The CFTC is overseeing the CME and these indexes, and everything's been going okay. So I think that's a huge step. For the SEC then to step in and say, okay, now, we will permit futures trading, or not futures trading, but an ETF that's based on Bitcoin futures, I think is a pretty logical step, and it's kind of their baby step. They don't have to take a big step here. It's a baby step.
Lisa, that's assuming, of course, that. Oh, I'm sorry.
Go ahead, Lawrence.
I was just saying that's assuming, of course, that data is in fact clean, if you will. That the trading data that the indices that the CME uses are based off of prices, and that those prices in turn, that there is an actual market, a real market, and it's not a manipulated market that is moving prices for some of the major exchanges. In other words, if there's an exchange offshore that's pushing around the prices, and then it translates to prices in the U.S. A U.S. exchange that the CME is basically assuming that, well, it's fine anyway. And therefore the SEC is assuming it's fine as well, correct?
I would not say that they're assuming. I would say that the CME is monitoring that. That's not something the CME is necessarily going to take for granted. There have been cases where the CME in the past has identified potential price manipulation and has gone to regulators to look into that. So this isn't something that the CME is just taking for granted. The CME is looking at it, and if they are confident enough, you can never count on no manipulation, zero, absolutely none. But they are confident enough in this index that they are continuing to propound it, both indexes, and I think the CFTC is comfortable with it too. So we could expect that in the future, if there is manipulation that's affecting the price of Bitcoin that's reflected on those indexes, that the CME would squawk and there would be investigations.
Lisa, as we mentioned earlier in the show, the crypto community has been talking about a Bitcoin ETF for literally years, right? And now we finally are having the first futures ETFs. Is this because there has been some sort of shift in attitude or shift in policy in the SEC, with Gensler kind of like taking the helm? Or was it just kind of a matter of time? Like we would have seen a futures ETF around now, no matter who was in charge, just because it took that long for it to get established?
Oh, I think it is definitely a result of the chairman. Chairman Gensler is a different being than previous SEC chairs. Most chairs have come out of the lawyer, conservative, Wall Street sort of mold. And Chairman Gensler was a professor. He was, when he was researching and teaching about blockchain and cryptocurrencies before he arrived. He comes out of Goldman Sachs, which you might think might make him conservative, but he's not a lawyer. And there's a big difference between the conservatism of lawyers and the conservatism of maybe, business participants. Business people are far, like Gensler, are far more willing to experiment. So he respects and has great deference, I think, to the SEC and the historical role that the SEC has taken. And he's not trying to cause the SEC to bungee jump with Bitcoin, but he is more well-versed in blockchain and in cryptocurrencies. And I think he is pushing the agency to learn more and to be, kind of out of the usual comfort zone of SEC staff. So I do not think that this would have happened if we had had another chairman in the old kind of from the old guard. I think this really is a result of Chairman Gensler. And again, I would love to have my Chairman Gensler bobblehead doll because I just think he's terrific for, crypto and Bitcoin.
You mentioned, Lisa, the CFTC, they've also fined Bitfinex and Tether over $42 million on allegations that Tether or USDT coin, their stable coin, was not fully backed at all times, that Bitfinex violated a previous agency order. Just switching topics, but I'm wondering, what do you make of this latest decision? Is this the end of the matter, or is this a serious issue that will be scrutinized in the crypto industry by regulators?
Well, I think that it's odd that the CFTC released this as a single press release, but it's two separate orders because the over 40 million of that penalty was paid by Tether. And I think the CFTC is sending the message out, hey, if you're going to put out something, call it a stable coin and represent that it's backed by, actual assets, you better come through with that. Don't play fast and loose with what those assets are. Tether responded with a press release saying, hey, we've always had, full backing of the Tether coin, but it's just quibbling over where those assets were. Were those assets in accounts that had Tether's name on them, or were they third-party accounts? And were they commercial paper versus, actual U.S. currency? Those are important issues for the CFTC. That's not something that's just kind of a trivial thing behind the scenes. I mean, if you make statements, and I think this is the CFTC's message, if you are going to represent that you are putting a stable coin out there and you are going to state what it is that's backing it, you better come through and make sure that that's what you're doing. The other thing that Tether failed to do was, Tether said we're going to have audits, and they didn't. That's, again, another huge thing in the markets. On the Bitfinex side, we have a repeat player. Not a good thing for the industry. Bitfinex was in there, signed an order with the CFTC years ago, said that it would cease and desist, operating in the U.S. In a certain way. And here it is again. Last time they got whacked for $75,000, or they were able to settle for, a nominal penalty of $75,000. This time it's 1.5 million. I don't know if it's going to make a big difference, but it is not good for the industry to see violations of cease and desist orders. That's going to cause the CFTC to hover and monitor much more closely.
Lisa, if you go on Twitter and you see the general counsel of Tether and Bitfinex and also the CTO, they're crowing, they're high-fiving each other. They said this is all behind us. They promised mom and pop investors that everything is okay with what they're doing. Did the CFTC leave an opening for further action down the road? And if so, what exactly is it? And also, can an audit even happen from a company like this that would require financial statements such as an income statement to be publicized over a period of time?
Well, to answer your last question first, yes, you can have an audit. Certainly, it would look different than your traditional audit, where you go out and count assets, and it is a different animal, but it is certainly possible. And the bigger issue is, if it weren't possible, why would they say that they were going to get one? In terms of your first question, which now is escaping me for a second, the crowing about, I think I remember it now. The general counsel and Tether talking about, this is behind us. So, when you settle with the SEC or with the CFTC or the SEC, and you enter into a cease and desist order, it's never behind you. You are making a commitment to comply, and granted, you always have to comply. I mean, that's kind of a pre-existing requirement, but the option that the agencies have at this point is to come after you for contempt. And that's interesting that they did not do that with Bitfinex. They could have said, this was what you agreed to in the past. This is what you are doing right now, or what we found you were doing. It violates the previous order. Therefore, we are going to go to court and we are going to seek civil or criminal contempt. And that's sort of a fast track to, really whacking a company. So, now Tether has a cease and desist order. Okay, they have to move ahead and comply with that, with the threat of potential contempt actions being brought against them. It may seem trivial, but it is a fast track, and judges are never happy when there's an order that's violated.